on the notion of this everything rally to start this year, but technology, and energy's a good place to add that to the conversation. The fact that energy's done well, industrials have done well, materials have done well, and discretionary has done well, among others. Is that a sign of even bigger things to come as this year progresses?
Yes, Scott, I would like to mention on what's going on in Venezuela. I would hope that President Trump would talk about returning power to the true winners of the last presidential election, Machado Gonzalez, that was stolen by Maduro, and his criminal group, which appears to be, he didn't, negotiating with them. If we could get power back to the people there with U.S. involvement, I think that would be the best. Anyway, what's going on with oil, I think actually what is happening in Iraq is much more important for near term for oil than what's going to be happening in Venezuela. We all know that's a long-term issue. That being said, lower oil prices, is good for everyone. The turn you talked about, the broadening of the market that we talked about for 2 or 3 years. Basically, is I think two forces: lower short-term interest rates is one of the forces, broadening of the AI, being able to avoid either the higher tariffs, the restrictions on the labor force. President Trump was right. The numbers on GDP in the fourth quarter, the estimates so far are really spectacular. No economist could have predicted 5% plus. They lowered it a little bit from what President Trump just mentioned, but it's still estimate over 5%. Now, that will be revised, but with that government shutdown, if you would have asked 3 or 4 months ago, could we have achieved 4.5 plus GDP growth in that quarter? I wouldn't have said so, and I don't know any economists that would have. So there's strong momentum, really strong momentum going into 2026. And again, those little bumps I mentioned at the beginning of the hour, we get through those, and there are blue skies ahead.
I think those blue skies are at least in part due to the fact, and certainly if you look at these other sectors of the market, that the earnings performance from them, from the areas outside of tech, are going to be very strong. Estimates are high. Some suggest maybe they're too high. And not to say that any of those other areas are going to be able to outpace their earnings growth of the mega cap stocks, but nonetheless, they will do so enough that is why these stocks are starting to perform and could have some staying power. You buy that?
I buy that, and with reasonable PE. So their PEs are either going to stay the same or likely expand. Now, the growth rate of the earnings on the Mag 7 and those tech are certainly much higher, but those PEs are also much higher. So, and I think there's competition, breakthrough, type of threats on AI that, who's going to have the next breakthrough that's going to, thrash the profits of a competitor. That's important to think about in that. But the other stocks are using AI. They're using those lower interest rates. They're using the cloud, which is another factor that many of those companies have not used fully and are beginning to use to bring those profits up. And once you bring those profits up, you can bring those 13, 14, 15 PEs up 3 or 4 notches. And that's why I predict that they will beat on return the Mag 7, even with the Mag 7 and related tech growing faster in earnings.